Debits and credits confuse nearly everyone when they first start learning accounting, but they really don't need to. In this video, I'm going to show you exactly how you can understand them in the easiest way possible. Once you understand this, the rest of accounting becomes way easier. So let's get stuck in. Accounting is about recording transactions. So you might ask, well, what are transactions? Well, transactions are simply flows of value. That value comes from somewhere and it goes to somewhere else. In accounting, we call the source a credit, which is commonly abbreviated as a CR. And we call the destination a debit, which is commonly abbreviated as a DR. And then we have this arrow here, which shows the flow of value from the source to the destination, which I said earlier. Now, I want you to forget the idea that a debit is something that is good and a credit is something that is bad. In accounting, debits and credits simply describe direction. Accounting is built on something called the double entry system. This simply means that every change in the books impacts two sides, both the debit side and the credit side. This concept is supported by the accounting equation. The accounting equation is a very important concept in accounting, and it is assets equals liabilities plus equity. The accounting equation tells us that it always needs to stay in balance. If one side of the equation increases, for example, an asset, either a liability or an equity will also have to increase so that the equation stays balanced. Debits and credits are the system that we use to record those changes. Now, this is the key part of this video. All you need to remember is that there are 6 core types of accounts. Some of those accounts increase with debits and some increase with credits. In accounting, if an account increases with a debit, it is common terminology to say that the account has a debit nature. Conversely, if an account increases with a credit, you may hear people say that such an account has a credit nature. The absolute easiest way to remember the nature of any account is with this acronym called dealer. Each letter in this acronym represents one of the 6 core accounts. So we have dividends, expenses, assets, liabilities, equity, and revenue. Then all you have to do is remember that the first 3 letters of the acronym have a debit nature, meaning they increase with a debit. Then the last 3 letters of the acronym, LER, liabilities, equity, and revenue, increase with a credit. So they have a credit nature. This acronym helps you instantly know which direction each account moves. So let's run through a couple of examples to really ingrain this process and make it super easy for you. So in the first example, let's say that your business borrows $1,000 of cash from the bank. So from the double entry concept, we know that this has to have an impact on at least 2 accounts. We know that borrowing $1,000 from a bank gives rise to a liability. On the other hand, with that loan, we know that we receive $1,000 in cash, and we know that cash is an asset. So in this transaction, what we want to show is an increase in a liability, being the bank loan, and an increase in cash. So when it comes to writing our journal entries, we want to start with our debits. So we will debit asset, being the cash, and credit the liability, being the bank loan. And both amounts here are for the $1,000. And from completing this journal entry, we can also see that the accounting equation holds true in that assets equals liabilities. So now let's run through a second quick example. So now let's assume that you've just paid $200 for electricity. In this example, we have value that is going to the electricity provider. So that's an expense which we know increases with the debit. And for the other side of the transaction, where is that money coming from? Well, that money is coming from your cash account, which we know is an asset, which is also on the side that is a debit nature. So in this example, we want to show an increase to expense, but we also want to show a decrease to an asset. If we know that we have to debit these accounts to increase them, that must mean that we credit the asset or the cash account to show that there's a decrease in cash. So let's draw out the journal entry. So first we want to debit expense, being the electricity expense. And we want to credit our asset, being the cash to pay for the electricity. And again, in this example, we can see that the double entry rule is holding true, where we have our debits equaling our credits. So to summarize, every transaction is a flow of economic benefit. Once you understand where the value is coming from and where it is going, debits and credits become very intuitive. Be sure to deeply understand the accounting equation and the nature of each of the core accounts, and you've already mastered some of the most foundational concepts in accounting. I hope this video helped you. If it did, please give this video a like. In this channel, I will be covering all things accounting, so if this content would be of use to you, please consider subscribing to the channel. Thanks all, and I'll see you in the next video.